welcome everyone. Happy Wednesday. And as you can see, we have Diana Bajamovic on with us today, MBS Highway. Diana joined us before and shared a lot of great insights about MBS Highway. It's going to be some new material this week, right, Diana?
Yeah, so we'll talk about what's more relevant in the news right now and how MBS Highway can help with that.
Perfect. Okay. So she's going to be running through, again, some MBS best practices, and it's always very insightful from you and Megan. So we're super excited to have you. We can probably go ahead and kick it off. We have a decent amount on right now. So welcome, Diana. Thanks for being with us today, and I will let you have the stage.
Thank you, Val. Thanks for always having us from both Megan and myself. And thank you for everybody that joined to come watch. If you were here last time, good to see you again. And if you're new, it's great to meet you. So I actually see a question before we even get started. Let's get this out first. So are the 1 hour social media videos in CMA current? I have not reviewed those yet. Yes, so those are pretty evergreen, John. If you go in there and watch them, they'll just have to do with any time really. They're not for any specific kind of market or any kind of economic news. They're really just for whenever you want them. And they'll train you on how to best use social media and social video, which is something we'll talk a little bit about today too. Glad to see you're on CMA though. That's a nice thing to see. So let me share my screen. And while I do, I just want to talk a little bit about what's going on right now in the news, in the markets, and really what MBS Highway has been doing to help educate you guys as our subscribers. And if you're not on board yet, that's fine. We'll help you get on. But if you are, then I hope you're doing a lot of what we're going to be looking at today. But if not, now is a really good time to get started. It's the end of the year. We're going into a little bit of a funny year next year with what the Fed's doing. And we heard from the Fed yesterday. And Jerome Powell has finally decided to get rid of the term transitory. So, all these different things that Jerome Powell said yesterday, that inflation is significantly rising and may continue to be around until at least mid 2022, that really hurt the bond market yesterday. And we think that it's going to be a little bit of a rocky ride because of all these different comments from people like Powell and Yellen as well that we heard from yesterday. So every single day, what we want to do is make sure you're ready to answer your clients and referral partners questions, no matter what's happening in the markets. The best way to do that is watching our daily morning update video. So once you're logged into your account, hover over the updates tab, click morning update, or we'll send you an email every single morning when this is posted, and you'll be able to click the link there. And this morning, oops, sorry, a little loud. But if you watch our updates, you'll know we have a fun little song. And I was pumped when I heard Britney today, Britney Spears. So you have Oops, I Did It Again, saying that Powell and the Fed are making some little mistakes again or not saying the right things again. So that was our theme today. Let's shut the music now. I was just very excited about it today. And then you have Barry come back in and start talking about what's happening in the news. Of course, today with the Fed, anything in the markets. And then you'll see Dan and Megan come in shortly after. Dan will talk about some other reports. Today we got mortgage applications like we do every Wednesday of each week, as well as ADP. And then Megan will come in, talk about any other housing news, economic numbers, and Barry will close us out at the end with the charts that we go through. So for you CMAers in this group right now, you'll notice these charts, you'll recognize them. And even if you're on MBS Highway every day, you'll recognize these charts, these candlestick charts. This will show you on a live basis what's happening with mortgage bonds, with treasuries, and sometimes the S&P if it comes into talks. So Barry will show you exactly how to read these charts, what they mean to rates, what our position is. So this morning, we decided to go carefully floating. After issuing a lock alert yesterday, we were able to save some pricing yesterday afternoon after the markets really went south. But this morning, we were down a little bit this morning, but we decided to float anyway. And look what's happening here. We are seeing pricing come back a little bit. Listen, we're not perfect, and you know that, but we have a pretty good track record, and you can see that through our really reliable lock alerts. So that's something I'll talk about more. But make sure that you study this information on a daily basis. I mean, it's nice where when you're a good loan officer, you can get the lowest rate for your customers, a low amount of closing costs, low amount of points, or maybe the fastest closing time. You're a quick loan officer. Every good loan officer is going to be able to do that. What's really going to set you apart, and you already know this, is your knowledge and your advice. And you build trust through knowledge, and really building trust is what's the foundation of a good relationship, whether it's personal, whether it's friendship, or whether it's with your customers, friends, referral partners, whatever it is. So that's what we help you do every single day. Also want to point out that you have an afternoon write-up called your Daily Market Wrap. Excuse me. And this is just a short 2-3 minute read that wraps up what happened in today's trading day. You'll notice it was dated for yesterday afternoon. So today around 5 o'clock Eastern, you'll see a new one posted. This will just kind of recap those economic numbers and what kind of position we have moving into the next day. So that's a little bit about your daily analysis. You also have your weekly analysis under the updates tab. You have some really great newsletters from people like John Malden, this Thoughts from the Frontline piece. This is my favorite weekly read. It comes out late on a Friday night, so it's a nice early Saturday morning read. I like to read it when I'm at the gym on the treadmill, get my mind off of it. And it's pretty distracting because it's very interesting. So read stuff like this every single week. And then once you're comfortable enough with the markets and how to read candlestick charts, after watching the daily update, you do have access to your markets overview page. I really don't want to spend too much time on this today because I want to get to the meat of the tools and show you exactly how to use these tools with your customers. But this is a huge one as well. So if you've taken CMA, you listen to myself, Megan, Dan, Barry, any of us speak, you're probably pretty familiar with these charts already. But just know one little helpful tip as you're exploring MBS Highway, no matter what page you're on, you're going to see a little help icon on the right side of the page. That'll pull up a training video for any tool that you're on. So today, I'm going to try not to take more than 30 to 40 minutes of your time. I know we're super busy. First day of the last month of the year. I know it's a busy time. We're all trying to prep. So we'll get through this pretty quick, but just know if you want anything more elaborate, go on our website, look at the videos, give me a call directly, give our support team a call directly. We'd be more than happy to help walk you through. So under those first two sections of the site are where you're going to find your main information. Then you're going to see under the real estate tab, you have a bunch of different real estate reports. And I really wish I can go through everything with you guys, but we'll be here for hours. And I know you guys don't have time for that. So we'll just go through a few today. So under the real estate tab, let's take a look at our bid over asking price tool. This is something super relevant in our market right now. I may or may not have showed this on the last call, but I think it's important anyway to get a refresher of it. So what you can do here is enter in a zip code, MLS number, a full street address, or your state and county. It's nice where if you enter an MLS number that we have access to, we'll be able to pull in all the information for that home. So let me pull up an MLS number. It'll be for my area here in New Jersey, but of course you can customize this. And you click search. And then if we have that listing available, which most of the time we do, we're able to pull in the information for you. If we're not, just like this case here, it's easy enough to put it in ourselves. So what we'll see is that our seller that we're working with has paid for this home that they purchased. Let's just call it maybe $300,000 back in June of 2019. And you'll see that we put in the current asking price for you since we do have that listing data. As well as the bid over asking price, this is something that you fill in yourself. So for example, if our customer has to come in $10,000 over asking price, enter that number in here. And then it's cool because we have two different types of forecasting models or estimated current values of this home. You have one that's based on appreciation, which is this option here. Let me zoom in too, it's a little small. Or you have your MB estimate that's based on our automated valuation model. We'll always default to the one that's higher. When you click results, you'll see your results, and it puts together this beautiful piece for you that in one glance shows your customer, listen, I know it sucks coming in $10,000 above asking price. Nobody wants to come in at asking price, never mind above it. But we kind of can't get around it in this market. There are simply just not enough homes being put up on the market. We're, I think, still 3 to 4 million homes short of where we should be to meet our demand. And a lot of the homes that are going up are on the higher end. So we're going to see that this customer has to come in $10,000 over asking, brings our total bid to $425,000. At a quick glance, we'll see that in 7 months, based on forecasted appreciation, this customer will recover their bid. Over the next 5 years, almost $98,000 in appreciation. Clearly, we're very confident in this accuracy level. We're at 93%. And then your graph below. This shows you really the same information. So from the last sale of the home to how it's looking today, how it's appreciated, we're going to see that we've covered that $10,000, that dark purple there, in just that first year alone, specifically in the first 7 months. So this is a really great and easy way, not only for your customers to understand if it's a good idea to come in above asking price and how much, but your realtors will love this tool. And they're going to ask you for this every single time they work with a buyer that has to consider coming above asking price. Notice that you can edit the photos here. Again, you'll see that in the training videos whenever you need them. But let's see what this looks like as a PDF or image export. What you can do is choose your co-brand partner, or you don't have to, it's up to you. and then export as PDF, export as image, or email it to yourself as a PDF. I'm actually going to download it as an image because I think it's really interesting when you post something like this on your social media, for example, whether it's the bid over asking price tool or the real estate report card, which I'll give you a very quick glance at after this. Let's just say it's this tool here. You throw this on your social media and say, hey, if you're looking to buy a home right now and don't want to come in over asking price, kind of can't get around it. But take a look at a beautiful report like this that shows you you'll gain back that ask in about 7 months in this market. Of course, you can say something like, comment your market if you want to see a report like this. You know how many leads you get from customers that are shopping for a home right now? Somebody like myself, if I was looking to move out and I wasn't working at MBS Highway, I wouldn't know where to start, especially in a situation like this. My friends right now are purchasing their first home, many of them actually, but one couple in particular, they were waiting about a year and a half and they finally just purchased now. And they were like, Diana, I wish I waited. I'm sorry, I wish I listened to you when you told me don't wait about a year ago. And I said, listen, not that I'm always right or anything, but you should have seen. Yeah, but but you should have listen when you see, forecasted appreciation is very strong. We do not see that slowing down because again, we simply don't have enough homes or on the market, or we're not putting enough homes on the market to meet our demand, driving prices higher. So I do see a question. Can we manipulate the appreciation rate? 4.33 is extremely low. Okay. What market are you in, John? Because this one is for New Jersey. Are you looking in the same market? It depends on where you put the address in. Okay. So for Denver, of course, it might be slightly different. But to answer your question specifically, no, this appreciation rate you cannot edit. But on a tool like the real estate report card, which is actually what I was going to suggest that you use if you'd like to edit it, this is where you can enter a custom appreciation rate. And it really will show you the same kind of breakdown. So here's our real estate report card. This is a different tool now. I put that same MLS number in, and you'll notice that in the first year, we have 6.14% appreciation. You would have seen that the 5-year is a bit lower, even if it's in the same market, because we've averaged it out for the next 5 years based on a specific home price. So depending on what home price you put in here too, that'll adjust the appreciation rate. But to customize it, you come in here, enter in whichever appreciation rate you want, or to get even more specific, go to our appreciation calculator and put in an exact custom appreciation rate, and you can manipulate that. So Val, unless you had anything you wanted me to cover else here, we can move on to some of the calculators, some loan comparison tools. Sound good?
No, I think this is great. I think, especially to your point, the one thing that I've seen a lot of people do, and this might not be related specifically to the appreciation and posting that on social media, but the same thing a lot of people have been doing is posting, comment your rent below, and I'll tell you like how much you could get a house for in, comparable price. And I've seen a lot of engagement on those types of posts. So if you make it really easy for them to engage with the post, put something like that out. And like you said, ask them to comment whatever below, whatever market they're in or whatever it may be. If it's relevant to them, that's going to get them to take action a lot more than if they have to put a lot of effort into it. So that's a good point.
Yeah, it's hard for your buyers to go online and find like an online buy versus rent or affordability calculator, for example. It's not easy for them to understand because they don't do what we do all day, every day, right? So it's hard for them to understand what numbers the piece is asking for, what it's going to generate in the end. So having you there doing that means a ton to these customers that you're going to work with. I love that idea. And when you do that on social media, once you get that rent, what you can actually do is come under the calculator section, use our buy versus rent tool, and enter in that desired monthly rent or monthly payment, for example. So if this customer knows they don't want to spend more than, let's just call it $3,000 a month on housing expenses. Oh my God, I always do this backwards. This is the zip code part. Sorry. So I'm in New Jersey again here. Then you put in your desired monthly payment. So they don't want to spend more than $3,000 a month. Put in their LTV ratio, the interest rate, and their term. Once you click continue, it's actually pretty cool that the piece is done for you already. You can edit it. You can enter your renting information, property information, and then you see your piece below. But in this renting section here, you'll notice we're at $2,757 a month in rent, and you're showing them that they could afford a $451,000 home if they were to keep that same kind of monthly total expense, really. And once you send this to your customer, exactly what Val said, this will be huge to show to them because not only on a cash flow basis is it cheaper to purchase than rent by about $12,000. On top of that, they forget about the appreciation they'll gain, about 250,000, as well as amortization. This is not always, but almost always forgotten that not all of your mortgage payment is going to be your interest or cost, for example. Part of that is principal that goes back in your pocket, and then your interest goes back to your lender. So that principal portion that we know what it is, we have to explain to our customers that that's going to build your equity in the home. So down the road, you can maybe refinance again, pull cash out. Right now is the highest on record of equity in homes in the US. I mean, it's crazy that people are not tapping into it as much as they are right now. That's a huge opportunity for you. And then once you get to your piece at the bottom, showing this customer that they profit by almost $300,000 in 9 years living there, I mean, that's huge. Even for your shorter term movers, so less about 2 years, about 3 years, if they're only going to be there for 3 years, they still benefit by $50,000. And the nice thing is you can share this with a link on our site. So the save and share option over here, put in your customer's name, and then share this. You can copy this link. And if I were you, I would post this right in that Facebook thread to that specific customer and say, hey, see your custom report here. Not only will that customer open it, another customer will open it. But the important part here is that once they do, we'll ask for their name and email. So this acts as a great lead capture for you. So you can say, hey, I saw you checked out this buy versus rent comparison. If you'd like, we can set up a call and see what it looks like for you, if that's not the customer you did it for already. So take advantage of every opportunity you have here. There are a lot really to help market yourself on social media with, in person, at open houses, whatever it is here. And this is just what your piece looks like when you share it as a link.
That's awesome.
Yeah, thanks. So let's get back to the site now and let's take a look at maybe one or two more tools. Then we'll open it up to some questions. We'll have a little discussion if we want to bring anybody on to talk about anything. So under our loan advisor section here, you have, again, many great tools. I say that for every section because they're all great and I wish we can show them all. But I really, really wanted to focus on the debt consolidation and a little bit of the cost of waiting today based on the market that we have. So you hear the MBS Highway team screaming from the rooftops saying, use debt consolidation, do an annual review with your customers. I mean, listen, it's the holiday season, it's a giving season. Why not give your customer the gift of a better financial situation every single month? This is the tool that'll help you do just that. So it's a really good idea every year to go through your pipeline of the customers you've worked with in the past, or even find new customers, doesn't matter, and ask them, what's your rate? What debts do you have? What issues are you trying to overcome right now? Are your kids going to college? You don't have enough saved for that? Are you worried about not having enough for retirement? Are you looking to move up in purchase price in home? Whatever it is. People have a lot of, I don't want to say issues, but a lot of problems that they're trying to face in their life and these hardships. And we're actually able to help them with a tool like this. So let's take a look at a refinance scenario, but just know you can use this for a purchase client as well. I just think refinance is a little bit more relevant right now. And then we'll see that we have our customer with a monthly qualifying income of 14,000. This I think is in Seattle, Washington. That's the location it's in, just a sample scenario. And this customer has purchased a $500,000 home back in November of 2017. Again, we'll pull in that appreciation value and show that that home is now appreciated to about $610,000. Clearly a nice chunk of equity in that home now in a few short years. We'll then see the existing loan information. So this customer put down 20%. They have a $400,000 loan amount and a 2.75% rate. It's a pretty attractive loan if you ask me, with their monthly payment being about $1,600. So when you click continue, you'll enter your debts. Again, just to save some time here, we have some debts already entered: a Visa, MasterCard, Discover, a Chevy. I mean, this is a pretty standard debt picture for an American family. So I think we can move forward with this, but of course you can edit it. And then you see your proposed loan information, what you can do for your customer today. Well, they already put 20% down, so you can't get them out of MI. They have a 2.75% rate, and you're bringing them to 3.75%. Ooh, it's not the best. And then you'll see the closing costs about $4,000. They're going to look at you like you're nuts and be like, why would I do this? I have a great rate. I don't want to pay $4,000. But then you tell them there's more than just that. First of all, you built a ton of equity in your home, about $110,000 here. Or sorry, that's how much it's appreciated by, I should say. And then you'll see that your P&I is going to go from $1,633 a month to about $703 a month. So about a $7 jump here. But then we'll see that they've been paying these taxes, insurance, which unfortunately won't change, then the installment debt, which are your credit cards, or sorry, I should say your loans, and then your revolving debts, which are your credit cards. So overall, their monthly payment's going to go up by 70 bucks a month. Why would they go through this? Just to do a refinance, to lose money? It doesn't make sense. But then once you take it a step further for the first time, you'll show them if you include that Visa debt, you're already saving them 250 bucks a month. We can stop there. You've just let that customer walk away with savings. But if you keep going down the line here, start including every debt that they have, well, look at that. You're saving this customer $1,500 a month on their overall financial situation. Again, a gift that you've given them. If you call a customer out of the blue, I'm sure they like you, they trust you, they'll give you the time to put together a scenario like this. If you tell them this, they'll be thrilled. They'll walk away with this savings, spend it on dinner, put it in savings, put it in Bitcoin, whatever it is. Or you can become even more of an advisor and take it another step further. Show them one, we have this white space here between our current LTV and our LTV limit. So that shows that they still have about 31,000 in tappable equity in their home. So this customer has been telling you that they want to redo their bathroom. Okay, well, if we scroll up back to our debts, you're going to see in your debt name, you can go to other, choose cash out, and let's give that customer their $10,000 to redo their bathroom. And once you do, you'll see, okay, we save you a few bucks, about 50 bucks less a month, but you still have given them that $10,000 cash out. Another benefit that you've just given them, you can stop there and move on to the next client, or tell them, or if they tell you even that they don't want to get into a new 30-year term with this refinance, right? Of course, that's a worry for many people. You want to pay for less amount of time than you do more amount of time. So what you can tell them is if you can afford and if you're comfortable with the same payments you're making now, why not take that $1,500 and put it right back towards your principal? By doing so, no longer does this customer have about a 26-year term. They have less than a 13.5-year term. You've saved them almost 13 years of payments. Putting it into different terms, they were supposed to pay 311 more months of mortgage payments. They're only going to have to pay 160. And then your customer may ask, well, don't you have to wait for the whole life of the term to expire basically to see these benefits? Well, no, definitely not. You're going to see that in the first 5 years, if you kept doing things the way you've been doing them, we never had this conversation, you're going to amortize about $52,000. You're going to have that much in equity, which is a really great number. But if they take your advice, they're going to see about $87,000 more. So in just 5 years, we're going to see that they're going to gain about $138,000 in equity. By the end of that term, 13 years and 4 months, they're not going to have a balance as they were supposed to if they kept doing things the same way. That's where that net worth increase comes from. So again, you've saved them on a monthly basis, you've given them that cash out, and you've lost basically about 151 mortgage payments. I mean, that's a great gift. To take it one last step, if this is optional, of course, but what you can do here is click this pencil icon, and maybe the customer wants to put about $800 towards an investment and then reapply the remaining $650. Fine. We're still going to see that we reduce their term by about 7 years, increase their net worth, and save them about 81 payments. This is, again, as Val and I were just saying, a great thing to post on your social media and say, hey, click this link to take a look at a sample debt consolidation. If you have debts that you want to, maybe pay off or reduce your overall monthly payment or take cash out, contact me today and we'll put together a custom one for you. Take any opportunity you can to use these tools in the public eye where it just helps you become a better advisor. So let's see now. I don't see any questions. So of course, if you guys have any, please let us know. But I just want to show one more tool, if that's okay. And then we'll kind of go to get into some questions if we have any. I know we have a bunch of time left, but up to you guys if you want to take a look at anything else.
Perfect.
So under the marketing section here, you have a lot of really great tools. So open house flyers, integrated, MLS integrated, where we'll pull in those listings for you. They put together a really beautiful piece. Your marketing kit, which gives you an email drip campaign you can send to pre-qualified customers. Buying power, now depending on the market you're in, of course, it could be beneficial. And then you have your realtor marketing tool that'll help you just get in front of realtors. I actually have a question before we move on. So what do you say when the buyer says the market is cooling off or possibly going down? That's a very valid question. I mean, no one really knows what's going to happen. We know that, but Our research shows based on, again, I hate to repeat myself and be redundant, but just to say that, again, there are not as many enough homes on the market. Yeah, John, you're right. I probably should show them the birth rate chart. Let's take a look at that. John's a pro, clearly. He knows all this stuff. So let's take a look here at what John's saying. So this chart that we're going to be looking at now is going to show us birth rates and what they really mean to demand. And I'm actually going to pull up another version that's a little bit easier to see. So just bear with me for a minute. And it's really important to look at birth rates when we're looking at supply and demand, because that's going to be our demographic that's coming into the market. So what we're going to see here is for every single year since 1928, this will show us the number of births each year. So right now, if we look 33 years back, right around 1985, 1986, we're going to see that the people right here are 33 years old today. And the reason we're looking at 33 years old is because that's around the median age of a first-time home buyer. So we're going to see that 33 years ago, these people were born. They're coming into the market right now. And a lot of people think that it's just going to slow down or cool, like you're saying, Steve. But really, when you take a look at a chart like this, it looks just like a staircase where every single year it goes up from there, these birth rates. So in the next few years, and even going forward many more years, you're going to see that these births level off at around 4 million, 4.1 million or so. So these people are going to have to, at some point, enter the market and purchase a home, keeping our demand strong. And then when you take a look at this next chart, that's pretty much like a little storyline here, you're going to see that our orange bars represent completion, or our supply, in other words, and our blue bars represent our demand. So you're going to see that the blue bars are clearly outpacing the orange bars, or demand is outpacing supply since about 2017. And we, of course, think that that's going to continue based on the birth rate trend. But the really cool thing about this piece is if you look between this 2004, 2010 period or so, you see this surplus of homes. We know the story there. But if the builders only would have just looked at the time, really, of birth rates 33 years ago, it's pretty interesting to see that 33 years since that 2006 period that I just pointed out, birth rates took a tumble there. And then they pretty much leveled off at a really low number. Took them kind of a while to get right back on track, but it really fits like a hand in glove, showing that when you don't have the demand, you simply just don't have the sales really in the market. But we do think that since there's such low supply in the market right now, that it's going to be really hard to see a not so strong market in the near future. I see some questions. I see your question, Pinky, so we'll take a look at that. Is this data on the site to use and make a video with, and where? Yes and yes. So when you're on the site, this piece that I just pulled up here, this marketing kit, this is going to have a demo kit here where you can scroll through. And not only is it the two that I just showed you, but it's a lot more than that. But the one that I showed you specifically is piece number 7 and then piece number 8. So you can export this marketing kit with or without your branding on it, which is nice, and use this to share with your customers. And if you'd like a further explanation, you're going to see that we have them written below as well. Or you can just give us a call and we'll walk you through it. And then regarding making a video, the next tool I was actually going to show you is our Social Studio tool. So under the marketing tab, you have Social Studio. And this is great not only to record your own kind of custom scripts, you also have pre-written scripts from our team. So they're about 30 to 60 seconds long per script. I think we have about 30 different ones in here right now. We try to add one every 2 weeks or so, give or take. And they're all on different topics. So I'm sure we'll come up with another Fed one sooner or later with everything going on. But the last one is what I talked about before, that, equity in homes is going up 20 to 30% this year. And there's a huge opportunity to tap into that. So when you want to record a script, you can edit this, of course. So David, this is where you can put in your custom information if you'd like to edit this. And then you proceed to desktop mode. But before I do so, let me shut my camera because then it won't work. It'll turn your computer screen into a teleprompter. We'll access the camera and the microphone, and here we are. And then before we're ready to start recording, you're going to want to increase or decrease the speed of the scroll here, increase or decrease the font size. I like to increase the font size as much as possible and then increase the speed a little bit. Take a step back from the camera, get ready to record. And then once you click your record, it'll count you down. and then it just starts scrolling. So once this starts scrolling, it looks like I'm looking right at you, right at the camera, but really I'm reading the first line of that text there. So it makes it much more engaging when you share this with your customers and referral partners, any of your social media followers. So when you're done recording, I'd probably smile in the freeze frame next time. You click download, and then you share this to any of your social media platforms. You can even put it in an email, depending on the file size, or share it as a link or whatever it is. But this is a great way to share your custom videos on social media. And I know I mentioned it, but just to show you where, if you click create custom script, this is where you can add a custom script here. So if you have, an announcement or you're hosting an event and you want to send an invite out, this is a great place to do that. So let's take a look at a question. Where can we find this data? So Pinky, I think we answered that with the marketing kit, just seeing that now. So I hope that answered your question. And glad to hear you think it's helpful. And let me see this other question. Sure. So Pinky's question is really good. I'd love to do a short weekly market update to pre-approved buyers to keep them posted. I know you have a weekly newsletter, and for you that don't know, it's under the marketing tab under newsletter. But would you consider preparing a weekly consumer-friendly social studio script that we can use to easily do these market updates? Yeah, I mean, really, all these scripts that you'll see in the social studio library are consumer friendly. So this is, again, meant for you to record this, you to post on social media. But the best piece of advice I can give you is make sure it seems like it's coming from you, because it really is. We being MBS Highway don't want to take the credit for this information that you're learning and sharing with your customers. That's coming from you. So what we'd like you to do, or suggest that you do, I should say, is watch our daily morning update every single day and put together your own market update. I know it takes time, but it really is worth it putting together a beautiful video or market update for your customers. So you can go watch that morning update, read it or whatever, call us, we'll help you out too. Put together a short little script. Come into Social Studio, write your script and record your daily or even weekly video. Start out weekly just to get you started with it. But if you start having that consistency on social media with really great, compelling, educational content, people will run to you for advice on mortgage, real estate, whatever it is, the Fed, especially too, the markets. I mean, with all I've learned at MBS Highway with candlestick charting, I'm like teaching my friends about how to read the markets, like the stock market with candlestick charting. So you never know where this information can take you, but overall, it's really good to do like a weekly or even a daily update yourself with our information on here. So great questions. If anybody has any other questions, I'm happy to answer them. If we want to take a look at the markets a little bit, whatever it is. Again, I just wanted to be respectful of everybody's time. But other than that, thank you for joining. Let me shut my screen now.
And we also, we had Megan on, I guess that was last month, 2 months ago.
Yeah, I think so.
It might have been last month. And she went more in depth on the social part of things. We did like a whole social media session. So we'll record, or we'll include your last session on here, Diana, and then Megan's as well in the recap email. So if any of you weren't on that last call with Megan and you want to get more involved with the social studio and start sharing more content, that will all be helpful. So I highly encourage you. These are really insightful sessions with the MBS team. So definitely dive into that and start to use this in your social strategy. And you are muted, Diana. It has to happen once on every call.
Every single call. So, and then when you want to be muted, you're never muted. So thank you everyone. And thank you, Val, for having us on. And I think it was Ceci that's here too with us, right? Other panelists here. So thank you both for hosting and having us on. We love our Art of Homeownership team. And just to give you guys some information on the MBS Highway side, I know we always run through a lot on these kind of calls. It's really just because, again, we want to be respectful of your time, show you the meat of the information, and you can do your thing with it. We want you to be able to get in there and use it yourselves. But just know that we do host weekly training webinars. We're in a little bit of a transition period right now. You're going to see some pretty good updates coming to MBS Highway, I think this weekend, if all goes well. So starting Monday and Tuesday, you'll see that we have a whole new structure of training webinars on our site. It's not just going to be like a full 1 hour, hour and a half long training on the whole site. It's actually going to be feature specific. So if you really just want to learn about the refinance tools on Loan Advisor, join that training, or just real estate, join that training. So I think you guys will enjoy them. If you're wondering why we're not hosting them this week, that's just because we're in that period. But Monday, you'll see a big announcement from us, and Megan will talk about it on the update. And don't worry, you'll hear from us. So just wanted to give that update to everybody.
Awesome. Sounds good.
Cool.
And I'm going to be making this announcement over the next few weeks, just so everyone knows if they're not on any of the webinars. But the last Wednesday webinar of the month, so that's going to be the 29th, we will not be having a weekly webinar. So we'll make sure that you get emails and communication on that. But I think everyone's going to be kind of checked out that week. So we will not have a session Wednesday the 29th. But if there are any other questions, you can feel free to reach out to our team and we'll pass them on to Diana and MBS team, or reach out directly to them. I don't see any others coming through, so we can cut it off short today. And as always, Diana, we appreciate you hopping on. Thanks so much.
Thanks for having me. Thank you, everyone. Happy holidays.
Thanks, guys. Talk to you later.
Bye.